Greetings, members one and all of the Salivation Nation, with some information that might excite some silver bugs out there. According to this opinion piece, it looks like silver is the insurance to buy right now. So let's explore. Yes, this comes to us from Market Watch. Silver, not gold, is a portfolio insurance to buy now. And let's explore what this says by William L. Silber. Interesting name. Fear drives up precious metal prices. Fear of war, defaults, inflation, civil unrest, and anything that undermines trust in government. A week after the Lehman Brothers bankruptcy in 2000, gold and silver jumped by 15%. 3 years later, during the height of the European government debt crisis, when the obligations of Italy, Ireland, and Greece resembled junk bonds, silver more than quadrupled in value while gold increased 250%. Today, fear of a financial collapse has receded, and so have the prices of both precious metals. Gold sits at about $1,300, and silver languishes a little above $15. Is it time to buy at these bargain prices? The answer is yes, especially silver, but not for the reasons you think. Feel worry about inflation in today's U.S. economy, but right after the Great Recessions, when the Federal Reserve embarked on its program of quantitative easing to jumpstart the economy, many were concerned that inflation would emerge. With unemployment reaching 10% in 2009, the Fed expanded money and credit, drove down short-term interest rates to zero, and bought longer-term government bonds and mortgages in unprecedented amounts. According to basic economic analysis, too much money chasing too few goods leads to inflation. But the last 9 years have upended that conventional wisdom. Unemployment is now under 4% and inflation remains in check. Buying precious metals to protect against inflation today seems foolish. But no one knows when the next monetary upheaval will hit. The trigger might be an unanticipated default by a big company that has taken on too much debt, or there are many of those owned by private equity investors. Or inflation may spurt when we least expected. And I'll pause there because all of that quantitative easing that had occurred, we've really not seen the effects of it as of yet. You know, a lot of those dollars were printed and they were hoarded by these companies, and so they weren't really injected into the economy like as was expected. That could have caused this inflation. Also, a lot of it went to Europe. And some are saying we're starting to see some of those C notes or $100 bills make their way back. But really, for all intents and purposes, we still have not seen the negative side effects of quantitative easing in that regard. Economists can forecast the next financial earthquake about as well as seismologists can predict a tsunami. They know it only after they see it, but then it's too late to take cover. And the other thing, too, with regards to these economic indicators, how many times have you heard reported about revised GDP numbers or revised unemployment and the like? A lot of times these numbers come out, and by the time, several months have gone by, those numbers are changed. They change because the data are just being revised and to reflect the data that had been originally reported, but to track the original, a lot of times those economic indicators take a while to process through. So sometimes those numbers get revised backwards. And of course, 3 terms of negative growth translates to a recession. Precious metals resemble insurance. We pay premiums before disaster strikes, hoping that we don't need to make a claim. Small investment in silver and gold, less than 5% of a portfolio, serves the same purpose. We should buy insurance when the premiums are low and keep that coverage. Just let the protection sit there so you can sleep well at night. And it looks like he's written a book here, The Story of Silver, How the White Metal Shaped America and the Modern World. Very interesting. The ageless storehouses of gold and silver work when nothing else does. Like during the Great Recession, both precious metals are excellent investments to hedge against unforeseen risks. Of course, I really don't like to use the term investment in this case, but one can invest in insurance as a general term to protect yourself. And in that regard, I think it's fine to use the word. Silver makes sense because it is cheaper, rises faster than gold when disaster strikes, and it is easily divisible into small coins just in case you need to buy a loaf of bread or an iPhone or paper currency doesn't work. I do agree with that. However, even though past performance doesn't predict future results or present results, really, it's not necessarily could be the case that it could rise quicker than gold, but history has shown that as the case, silver is more volatile, and typically, really what it means is the ratio between gold and silver narrows during times of crisis. Gold belongs in a portfolio because a small amount goes a very long way in settling obligations. But right now, silver is a much better bargain, according to the author. It has declined by more than 65% from its 2011 peak, while gold is off by about 30%. Portfolio insurance is cheap today. If you own silver, hold it. If not, buy it. Keeping precious metals in the proper framework, a key but relatively small part of a portfolio, avoids the disaster of Nelson Bunker Hunt, the richest man in the world in the 1960s, who went bankrupt buying silver. Escalating inflation during the 70s made everyone a buyer, but no one did it on a scale like the Texas oil tycoon. Hunt ultimately bought almost 200 million ounces, more than the combined annual output of the four largest producing countries, and was accused of trying to corner the market, along with his brother, by the way. He denied the charge, but wound up going bankrupt in the process of accumulating his hoard. How did the richest man in the world lose everything? Instead of treating silver as an investment, part of the portfolio along with other assets, he fell in love with the white metal to the point of obsession, buying more with borrowed money than he could afford when prices declined. There you go. Wow. The lesson: buy silver now, do not become obsessed. And that's the key. And that's good. I'm glad that William Silver put that in there. And I didn't realize that about Mr. Hunt, and really that's kind of a problem I have. I just like the coins, rounds, and bars that I buy. I don't really want to part with them. But really, if it all comes down to it, hey, you got to let it go if you need to sell. And you also don't want to buy on borrowed money. If you can avoid it, now people will use credit cards and the points to their advantage. And certainly that's particularly fine, especially if you can pay it off within, that same month. But very interesting article, and I think it's well stated. I agree with it. However, I will say this, especially nowadays, comparatively, silver is more volatile, and really kind of always has been to a degree. But it's also even more so today than ever before. Silver is seen as a duality metal. Its role as a commodity and its uses in that regard, I think, are going to play a larger role in some of the price movements in both directions, by the way. And I could see a time where, with decrease or economic panic, there could be less demand for silver and enough of it out there that it may not rise as much as it has in the past, which is why I caution against his general statement there. With that being said, let's take a look at where the prices are for both metals. As of the recording of this video, we can see that all metals are down except for palladium, but it is interesting. Silver is hovering there right around the $15 mark. I think $15 is a pretty strong floor for silver, and gold is below its floor of $1,300. Kind of surprised at how much it's dropped, but we kind of discussed that the other day as to those reasons which has no effect on silver, by the way, which is why it's good to diversify. As for myself, I probably won't take the advice of that article just because I feel like I have enough. And I'm still buying silver, by the way, but just in smaller amounts, and trying to focus more on gold to broaden the portfolio. I want to get my personal gold to silver ratio down. But nonetheless, it is an encouraging article for silver bugs out there, and silver definitely does serve as that insurance policy and to protect yourself in times of economic instability. So post your thoughts below about this news and about this opinion piece here. Let me know what you think. I would like to extend a multitude of gratitude, y'all, for watching, and encourage you to please rate, comment, and subscribe.